September the 15th. I'm Greg McKenna. Here's my morning market wrap. It was as exciting on markets last night as it was in Australian politics. This morning, we haven't heard from the old Minister, obviously shattered by what's transpired in the last 24 hours. But from a market perspective, except for that little swoon yesterday afternoon in the Aussie dollar, the reality is that for most of the 26, 27 years now that I've been involved in markets, it played much of a role. Obviously, back in '86, when I was still in high school, got things moving, and we had a budget phase at one stage that really roiled bond markets. But from the point of view of overseas investors, the change from Abbott to Turnbull, or even to Shorten, at the next election, really shouldn't materially impact on the view on Australia. It's only if we get the big macro settings wrong, where the budget deficit is, what the fiscal situation is, what the government debt is, all those kind of things, or we put ourselves into a recession or have policies that look like they're going to do that, markets react. What we've got now is one set of hands to another set of steady hands. And you may not have liked the politics, you may not like the politics of Turnbull, but the reality is that we'll get a bit more progressive stuff and a bit more optimism and a bit more talk about their impacting on Australia from still on path where the ANZ's Dan put out a piece yesterday saying that the Aussie dollar is really ripping the non-mining economy higher, and even is starting to stimulate. So, we're starting to get the tailwinds that a lower Aussie does give us. So, from Abbott's point of view, maybe if he had been able to hang on for a couple more months, he might have got that tailwind. Turnbull's going to, you might even see the Aussie rally up through 72 cents over the next month or two. Anyway, to the overnight markets, and it was a sea of red across most stocks. In the US, the Dow, Nasdaq, and S&P were all down about 0.4%. You can see in the price action of the market is really at the moment, and what we've got. This is a chart, my Go Markets 24. So we're going nicely here, and while there's not a lot of catalysts to get things moving, in the US or sales out tonight, which is going to be a big one. Interestingly, though, my colleague Miles Udland from BI in New York wrote an article this morning that said that Rich Barry, who the floor of the New York Stock Exchange, has really started to pick up on a sense that it's gone from a buy the dip market to a sell the rallies market. Now, we've been talking about that here on my vodcast and then in my Business Insider 20 seconds reports and my Go Markets morning reports for a while now. The technical now, we've had a change in outlook on yesterday. We've had a break of big ranges, all those kind of things. That's not to say that it doesn't move on Friday morning Sydney time, Melbourne time, Brisbane time, that you won't get a reaction, a pop higher before you get stocks reverse again. But the reality is that the market and sentiment from traders is starting to turn. In Europe, it was mostly a down day as well. The DAX managed to rally a little bit. It closed just in the black, but for the rest of the region, it was down. Likewise, Asia yesterday, we saw the Nikkei down about 1.63%. We saw the Shanghai market down 2.6%. The Aussie market managed to rally 0.5% yesterday. It's down a little, 19 or 20 points, I think. But overall, it's relatively well at the moment. Of course, we're going to make a sustained break one way or the other, unless or until the S&P does. And if you have a look at the chart, excuse me, a very similar pattern to what we're seeing in the United States. So we'll get that resolution later this week. Obviously, the technicals on that are starting to. The wedge pattern suggests that the stock market should break lower. The problem, though, is that if you have a look at the technicals on the Aussie dollar, which we've got here. This is my daily charts. Sure, we're getting back up towards the top of that resistance channel, a resistance channel that's been now for 4 or 5 months. You know, you turn 72. If you take a bigger picture though, and the Aussie gets through 72 cents, that's somewhat incompatible. That would mean means the Fed stands pat. It would be somewhat incompatible with US stock market breakdown on a fundamental sense. And my sense is Aussie gets to test 72. We'll have a look there. I cut 50% last week when we got to my fast moving average. So, you know, but the Aussie's at 71.40. I expected to go 70. I wouldn't be surprised 3 cents or something like that on break. We've got to read that trend line until it breaks. So I'll keep an eye on that one. In other markets last night, oil was down again, another percent. Euro is down at 113. Sterling ran into a bit of selling yesterday. Very interesting. It really can't get, pardon me, it really can't get as high as I guess I thought it might have got. Please excuse me doing that on camera. But if Sterling's stalling and the Aussie is maybe you know, trying to break higher, then what do I want to do? I want to have a look at Sterling Aussie. And so when Aussie go in our markets, trend line. All right, let's go and have a look. Okay, so Sterling Aussie, here we are here. So what we've got, we've got a nice little uptrend here. All right, so if we let's put a line in, go from there, click, click. Right, are you happy with that as a line? Maybe, maybe not. It's had a faux test here, but we haven't called it a test because we've drawn our line there. It's had a bit of a test here. Pardon me. Is it starting to break down? I don't think it's confirmed until you see it break down through 113.70, 113.80, that kind of thing. So what I'm doing is I'm saying it's in this range here. With there's your bottom. It's a big fat kind of channel here. There's your top. But overall, my sense is it's going back to maybe 205. So that's the way I'm playing it. But it's got to break down through that low there before I get too excited. If it can't break through there, I'll be buying the dip. I'm currently short. So the reason I bring that up is that sometimes you can play the other crosses and take the US dollar out of it. So as a trader this week, you know, if you put on any trades against the US dollar, then you've got a digital outcome. What's the Fed going to do on Friday morning, 4 o'clock Sydney, Melbourne time? Whatever that outcome is going to impact on your cross. Now, of course, the Fed decision is going to impact on sterling and it's going to impact on Aussie, but it's not necessarily going to impact on those relativities. So it's a nice way sometimes of having a diversified bet based on your technicals or your fundamentals or however you like to trade, which is not necessarily tied to the key event risk of the market. And so then you've got to look at that. I like to tend to do it times like this. I tend to use the bigger crosses where both sides are liquid, as opposed to some of the esoteric crosses where only one side's liquid, because the one side of liquidity on some of the crosses makes for very difficult trading sometimes. So elsewhere, pardon me, iron ore ran into its first day of selling for a while. Oil's down again 1%, as I said. If you have a look at it on that chart, you know it's formed a very short-term base, but on the long-term chart, it looks like it's heading to $32, as I discussed yesterday. So if I have a quick look at my chart, I'll just give you the level. The level for me that oil, the front contract on NYMEX in MT4 terms needs to hold above is 43.48. So I'm happy to be long above 43.48. Give it 10 points, call it 34. But below that, I'd be thinking that it's probably going to head back down towards the recent lows. So we'll keep an eye on that one. Markets are still waiting for the Fed. And Lord, sorry. In Australia, we've got RBA minutes at 11:30 along with motor vehicle regos. Neither of those is expected to be market moving. The Bank of Japan has a monetary policy decision, which it will be putting out. ZEW survey in Germany and in Europe. And then retail sales are the big one tonight in markets. So we'll see what that has to do. Otherwise, just watch your levels. That's what I'm continuing to do. 72 cents in the Aussie is the target. I wrote a piece yesterday morning from the ANZ, which is worth having a look. If you have a look on my author page from yesterday, the ANZ saying that it's going to be the Aussie dollar is going to be stimulatory. I think that's really important. And when people ask questions about what can Malcolm Turnbull do for the economy, yesterday he talked about confidence. Conditions are already strong, so if he can deliver confidence, we will start to see some capex. Of course, demand has to be there, but if you get confidence in consumers, confidence from business will flow from that. So it's not going to happen overnight, but it will happen. That's it from me today. Have a great day. Watch your levels. Keep your positions relative to the risk in the market and your risk tolerance, volatility in the market, I should say. But otherwise, have a great day, and I'll see you tomorrow morning, Wednesday, around 9 o'clock. Bye for now.